record this. Hi everyone, welcome to this episode of Wealth Ability. So today I'm going to talk about how millionaires think about tax. I think that was one of my signature talks back in 2014 when I started a business, because of course I started my own accountancy business to help doctors to reduce the tax burden. But what I have learned about the concept about tax is actually from Rich Dad Accountant. So today I'm actually going to share what I have learned from them and how the wealthy people, how they relate to tax and how they deal with it. So over the last 4 years, apart from developing the tax skills, I've also been studying a lot on the rich people, like especially those ones who are self-made millionaire, who are becoming wealthy in a healthy way. And they all have things in common. So first of all, they all look after their health. So health is your first wealth. It's just the fundamental thing. With a good health, you have more positive energy and get through more like life challenges. And the second is they are willing to work on themselves regarding the relationship with money. So how they relate to their money, and they are aware of what are the inner messages, do their inner work. It's never going to be perfect, but as long as they are aware of it, they understand how their money blueprint work, and then they can really enjoy their money. So that's inner work. And the third pillar of becoming wealthy in a healthy way, that is, they don't shy away from knowing the basics. So these are the things, when it comes to tax or money or numbers, a lot of people think it's too complicated, or they think it shouldn't be their job to do it. Of course, it might not necessarily be your job to file your tax return, but it is still your primary responsibility to look after your own finances. So it is important, especially when we want to handle a lot of money, want to really have the money. We need to be aware of certain things so that we are able to handle more. In particular, when it comes to tax, it's important that when we are earning a lot of money, we're aware how it works. And today I actually learned the universal rule of tax, which a lot of millionaires, they are aware of. So they can gain control of their tax bill rather than having a taxman to control their life. So if you have read Rich Dad Poor Dad, earlier I mentioned I learned this concept from Rich Dad Accountant. So this system actually based on Rich Dad Poor Dad cash flow quadrant. So these 4 quadrants, as you can see from my screen, it's basically 4 types of people, how they earn their money. So you can earn money as an employee or as a self-employed, say you're a freelancer, or you're a business owner or investor. Because I work with doctors, so let me just use an example of a doctor. So the same doctor can be the salaried doctor in the hospital, and he or she has to be expected to turn up at a certain time, working as an employee. And then the same doctor is most likely, when they are more qualified, they become consultants and they do more of a self-employed work. They are doing more private work. So this again, they're becoming self-employed. The doctor, if they are more entrepreneurial, he or she can also set up a clinic, private business, so that they can really gain control of how they work and when they work, and also hire people to run the business for them. And then they can also become investor, because you can have money working hard for you. As far as like the kind of clients I have worked with, I do, of course, one person can be in 2 or 3 different quadrants. I do have clients who are salary doctors, but at the same time they have a property portfolio, so they fall into employees and as well as investors. So these are the 4 main quadrants. and you can use more than one. So there's nothing wrong with being in any of them, but it's just fundamentally four type of people how they earn their money. But there's also a very interesting thing that is, by the way, it is part of my webinar, Growing Your Wealth Through Tax in 1819. We do have this full webinar arranged on regular basis. So make sure you do get in touch reach out to me. And then if you're interested in the full webinar, or either we have the recordings from the previous ones, so you can get in touch with me. You can either get in touch with me by Facebook, join my group, or send me an email. So either way. Okay, so 95% of people on the left quadrants with 5% of the wealth, and 5% of people on the right quadrants with 95% of wealth. So that is actually very interesting. Why majority of the people, employee or self-employed, they only have 5% of the wealth, but very few people, like 5% of people on the right quadrants, becoming business and investors, they handle 95% of the wealth. We come back to these slides. First of all, of course, being a business owner on the right-hand side, it's a tough job to be on the right-hand side. Business owner or investors, they are handling far greater risks than those are employed or self-employed. But if they are doing really well, they can have more freedom and they have unlimited earning potential. So when we look at the employee, you might just be serving one or few organizations at a time, because you are eventually paid by your time at service. So your time is limited. That is why there's a ceiling on your earning potential. And then self-employed, again, it's, of course, self-employed, it seems like that person have a big freedom. You might be working on a project basis. You can work from home, which is give you more freedom. But again, it's still trading your hours for money. So that's, again, your time is limited. So that is why there's a ceiling on the earning potential. And if we look at the right quadrant, business owners, because of businesses, like if someone run a private clinic, that doctor will hire other doctors to do the job, to do some treatments. And then that a clinic will hire the receptionist to run all the admin, to greet people, to process payment. So they have the whole system working hard for that business owner. So yes, because the business owner, the doctor business owner, he or she has people working for them. They have a system working for them. So they are not necessarily trading their hours for money. That is why they have unlimited earning potential, because they are using other people's time to do the business. And then they are treating a lot of people. They can treat a lot more patients as a clinic, as opposed to being one individual. And then investors, those investors either investing in businesses or investing in assets, like in properties or like forex exchange. So there are different investors, but investors, they have the money, they are injecting the capital to the good causes. So for instance, like there are a lot of businesses, because the small businesses in the UK are the main player for the growth of UK economy. But a lot of business owners, they have the idea they might not necessarily have the capital to run a business. They might, especially when they're starting up, they might not have the money to run the business, do the research. So that's the investors come into play. They make these ideas coming into reality. They inject the blood to the economy. Same as investing in properties. So some people, they have a different strategies, like setting up a property management company, but they need investors to back up the money. So yes, the investors are also injecting the money. But again, when those investments are doing really well, they actually have the money working hard for them. They are not really working for the money. but instead they have the money working hard for them. Again, when you have money working hard for you, then there's unlimited earning potential. So that explains why majority of the people, they might be employee or self-employed because it's less risky. But again, there's a ceiling on your earning potential. But on the right-hand side, yes, it is very, very risky. And especially me as a business owner, I know entrepreneurial life is hard. So not many people are willing to take the risks, are willing to take a leap. And of course, being an entrepreneur is not for everyone. So I don't advise everyone to try entrepreneurship. It's not for everyone. So, but then if you do have an ambition, if you do have the drive and willing to take risks, then when you are doing really well, you can have more freedom. And investors as well. So you can be employees or self-employed, so have the certainty as well as doing something else. So I know at the moment, especially now we're getting into the gig economy, there are a lot of people, especially doctors, I know they have a salary job. They might be doing 2 or 3 days a week as a salaried doctor, but then they have a side business, which is a private clinic, a private practice on the side. They want to become business owner. And of course, nowadays there are platforms for doctors that can make you set up a private clinic very easily. It's more like a virtual clinic because there are some platforms, some apps, as far as I know. Actually, some of the doctors I know, they are doing a startup like this. So it's a platform that they have their own people doing the blood test to do a lot of the donkey work. But you, doctor, you can register your profile over there, and the private patients can book you in, and the system process the payment. So you can just do the job you are really good at, and do the job that you are really, in your zone of greatness. But then use that platform, the back office of that platform, they do all the donkey work. So it is possible. So you can become a combination of a bit of everything. But again, it just the theory is being a business owner or investor, you do have more freedom. And if you are willing to, if you want to have a greater wealth, and consider having more, moving a bit into the right-hand side of the quadrant. So because I'm supposed to talk about tax, but then the important thing talk about cash flow quadrant is to have you understand the basics, the base, because I'm going to talk about the tax side based on this concept. So if I were to apply UK tax rates to these 4 quadrants, so as an employee, when you are paid salary of more than 150K, which is a lot of doctors, senior doctors can easily achieve. So when you're at that level, you're paying tax at 45%. And again, adding on all the national insurance, perhaps half of the paycheck has gone. So you're actually heavily taxed. And self-employed as well, of course, you are taxed on your profits from your self-employed work. That is after all the expenses. But again, nearly half of the profit will go to the taxman. So because when you're earning at 40 or 45, 40% paying tax at 40% or 45%, that's a time you are nearly half of your profit will go to the taxman. And as a freelance doctor, these are achievable as far as I know. And but becomes a business owner, a lot of businesses, like private small businesses, they are setting up a private company. At the moment, this company is subject to corporation tax. So corporation tax for these companies are only 19%. So again, the tax rates has dropped significantly. And if the business owner draws dividends when the business is going really well, of course, the business owner can draw salary, which is income tax as usual, but that person can also have profit share. Profit share doesn't trigger any national insurance, so that's cheaper than taking salary. And then investors, again, your investment, of course, you will pay, you will need to pay tax as well, income tax. But these investors, most of the investment income, these are not trigger national insurance. And of course, some investors, some kind of investment, you actually get tax credit upfront. Some governments, because the UK government really want to encourage these people who has money to inject the funds to the startup businesses, the innovative ideas, to make sure these ideas come into reality and adding a lot of value to people. So they want to encouraging these investors. That's why they give very lucrative tax relief. Some investments say, if you, for every £10,000 you invest into these startups, you get 50% of your investment back as a tax credit. So you put £10,000 in, and then you get £5,000 as a tax relief. So that is investors. So as we can see on the left-hand side, those people are majority of the people and handle only 5% of the wealth, but then they are heavily taxed. But on the right-hand side, these are the people, they pay less tax, they have better earning potential, and then they are handling 95% of the wealth. So what does that tell us? Of course, as we can see, employee or self-employed, you have a limited amount of time, and you might be only adding value to a number of organizations at a time. But as a business owner, because businesses like entrepreneurs, they want to use their innovative idea to add massive value to the society. Imagine a doctor who set up a business that is to develop a treatment to cure cancer. And if that succeeds, if that's a really innovative treatment, if that really give an advancement on the whole healthcare area in terms of treating cancer, then that's actually adding massive value globally. So they can add massive value. And investors as well, they are injecting funds, they are giving the blood to the businesses or the assets. So more money, more wealth can be generated. So they are actually enriching the economy by investing their money. So business and investors, they are actually adding a lot more value. And of course, they are doing what the government wants. Business owners, they have people working hard for them, so that they are creating jobs. That is what government want. They want more people have jobs. So they are awarded more tax breaks. And the same as investors, as earlier I mentioned, these investors investing in startups, those innovative ideas can come into reality and adding massive value. Imagine the same doctor who want to develop a innovative, advanced treatment to cure cancer that's maybe less painful, maybe more effective. Then if they have the money to make this come into reality and it succeeds, then that is actually altogether adding massive value to the economy globally. So they are actually adding more value. So as what we can see from all these four quadrants in terms of wealth growth, as well as the tax breaks. So the people who are earning a lot of money, who are growing their wealth, are not necessarily the one who work the longest or the hardest. Are not, because when you want to earn more money, you're trying to work more. That is effectively trading your hours for money, but it's not necessarily like that. You need to have a system or have money working hard for you. So they are by adding a lot of more value to the economy. And then the byproduct is the government do award you more tax breaks. So that is really coming to this equation: income equals value added. So if you want to grow your income, grow your wealth, add more value. And also the byproduct is the government will award you more tax breaks. So that will help you to grow your wealth even further. So that is why I believe, as a doctor, you do work really hard to earn your profession, to save lives for your patients. And if you do believe that you deserve the kind of wealthy lifestyle for the hard work you have done, then these are the roadmap for you to consider that to really have the freedom to have better work-life balance and earn the money and grow the wealth you want. And at the same time, get the advantage of more tax breaks, either as a business owner or as investor. Okay, so that's what I like to share for this live. Of course, this is part of my full webinar, Grow Your Wealth Through Tax. And if you are interested in the full webinar, make sure you do reach out to me. If you're watching me on the replay, I have my email address in the description. So you can drop me email and reach out to me. So I will send you more details on the webinar. And again, this is not a replacement of the professional tailored advice. This is only for education, but I do provide advice for my retainer clients. So if you need tailored, personalized advice, make sure you do reach out to me by email, and then we can have a chat to see how I can help you. Okay, so again, I hope you find this one useful, and I hope to see you very soon. Bye now.